JJ the CPA here. Hope you're doing well. Most likely this video will be more geared towards those that have been a part of this YouTube family, JJ the CPA, for a long time, or if it's new, maybe you'll enjoy this and welcome. So real quick, I am a certified public accountant, been practicing for 28 years. I've had my own practice for 24 years, specializing in working with small businesses and their owners, specifically on tax and accounting and all the things that, in essence, make the business go around, if you will, from a financial standpoint. Now, I've been pulled into being a counselor, if you will, pulled into businesses breaking up, expanding, selling, buying additional, been involved with the divorce aspect, meaning whether it's partners or individuals that were married that are now having to break up a business or split it or buy out, if you will. So right now, I am waiting for Amanda to finish up an elective surgery, so nothing to be worried about, but she's working she's doing an elective surgery. So that's why I'm mentioning at the beginning, this is probably more for those that have been a part of this family. Probably Jim, right? Denny Crane. Jim is somebody I've gotten to know. He's up in the Northwest and has enjoyed this new, or not new, I guess really it's videos that are coming back from what I used to do when I had a little more time. And Tony D sent me an email, as well as Jim, and Tony D had a nice relaxing drink listening to one of my recent videos, so I appreciate that, and all of you tuning in. I could go on and on with the names, Fred. So what do we want to talk about today is having a successful business. Having a successful business. How do you define that? Now, I could have a definition for you, but how do you define that? Oops, sorry. See, I've had my finger over there for a minute. I forgot my video stand, so I'm holding this, and you'll see some videos coming out over the next several weeks where I'm shooting them in the vehicle waiting on Amanda, and then not having my stand. My hand has grown a little weary, so I got this sitting on the steering wheel. But the definition of a successful business is different for everybody. And really, the definition of a successful business, in my opinion, is one that has been around for at least a couple of years. And a very successful business is one that's been around for 5 years. I'm not going to be able to rattle off the statistic for you because it has drastically changed in terms of how many new businesses make it past 2 years, any business, and then how many make it to 5 years. Now, secondary, in my opinion, to know that you're having a successful business is that at 2 years, your debt has gone down. Now, if you expanded, you might have new debt related to that. Or if when you opened, you didn't get everything that you could day one, which can be smart. But on the new loans that you got at the time you opened the businesses, those loans should be less in the 2 year mark. If you got new loans, then there should have been some justification for that, and those should be less. What does that mean? A lot of businesses, they hit that 2 year mark and they're borrowing more money, not to expand, but to keep the business going. Not necessarily a bad thing. I'm not going to go down the rabbit hole of saying if you need money after 2 years, you shouldn't continue the business. Now, you probably need to reevaluate some things. The bank's going to help you do that. I talk about it in my book, that a bank wants to get paid back. So if after 2 years you're not refinancing, okay, I'm talking about going to get more money after 2 years, and not more money for new equipment, not more money for a new van. I'm talking about more money to keep things going, okay? Typically, if after 2 years the bank still feels that you're going to cash flow to pay them back, that's a pretty good indicator that probably moving in a direction, unless you've fooled yourself and fooled the bank on your quote-unquote projections. But then what happens at year 2, though, is maybe the bank's not going to loan anymore. Maybe they're concerned that you need additional funds to keep the business going, and then, well, I just need to find some investors. Wrong. Okay, if a bank won't loan to you, okay, that's a strong indicator that you should not get an investor, because if you get an investor, it's not about a return on investment that you can provide them. It is giving them their money back within a reasonable amount of time. And yes, after you give them their money, then they're in a position where they're able to make a return on investment. Okay? So when you're looking at putting together a successful business, I'm backdooring into saying it's one that cash flows. That's where there can be a different definition of the success of the business, is the cash flow that you're requiring. So I've done some other videos on this, but many, they're just wanting to cash flow enough to make a living. Their living isn't necessarily the same as the next person's. And if they can make that living, pay their tax, pay debt down, stay in existence after 2 years, hit 5 years, debt's going down, then that's a successful business that's meeting the goal of the owner. The goal of the owner should be the profitability that then meets the goals of why you started the business, which should be profitability. So when you're looking at profitability, a successful business, though, doesn't need to infuse money over and over and over without it reducing down the amount, in essence, that's borrowed, or without paying back investors. Meaning, if it's not able to do that, then you're really not profitable. You're not really meeting the goal. So you want to be viable. You want to be around. So all of that then leads to a successful business being one that can be shrewd. Now, shrewd typically comes with a negative connotation, but shrewd in my mind is able to make good business decisions that benefit the business. Because if the business is benefited, the owner's benefited, the employees benefit, the customers benefit, and the vendors benefit. So making smart decisions, in my opinion, is making shrewd decisions. What would that also come down to? It would come down to then being honest with yourself. Businesses that hit the 2-year mark, hit the 5-year mark, continually are honest with themselves as often as they are able to be. Now, what does that mean, being honest with yourself? Well, in part, being honest with yourself is when you're hitting the 2-year mark, are you really profitable? Are you just borrowing money to keep it alive that you don't have to go back to getting a job? Or at the 5-year mark? Being honest with yourself in what you should charge. I mean, honestly, most small business owners aren't honest with themselves. Sounds weird. By not charging enough. What they should be honest with themselves on is, I'm doing this at this cost, at this risk, at this value. I'm going to charge this. That's being honest with yourself on what you should charge. Not being honest with yourself is, well, gee golly, I don't know if they're going to pay this. And then by not being honest with yourself, with your business, by not being shrewd, by not being smart, you don't charge enough. and therefore you're not as profitable, and therefore you're borrowing money, and therefore you're on a slippery slope. Also, being honest with yourself is, what employees do you need? How much do they really need to be paid? It's not an emotional decision. It is, what is that employee doing to bring value to the business or help to the business? And then what is that cost to have that value? Now, of course, that a lot of opinion in that, and that's why it becomes emotional. But you have to think through, the same as any other cost to the business, what is the value of that cost to the business? What is that employee or that machinery saving for the business, whether it's time, or what is it adding to the business, such as a perceived value to the customer, or responsiveness to the customer, or readiness for the customer, or speed of product or service to the customer. Those are things that bring value. And then how do you value that? Well, you have to value it in the sense of, are you able to charge enough to the employee? Scratch that. How are you able to charge enough to the customer to then net enough to pay for that cost, whatever it is, to then also net enough to meet your goals for your standards to make it worth you having this business? So a successful business hitting the 2 years isn't perfect. Doesn't mean that they don't need a little cash infusion here or there, because a cash infusion here or there that then is paid back here or there within a reasonable short amount of time. Nothing wrong with that. It's just kind of the ongoings of the business, is kind of the purpose of a line of credit. So being honest with yourself is, do I actually have a successful business? And being honest with yourself is, then what do I need to do to have a successful business? And then being honest with yourself is then actually doing it. Because as small business owners, it's our baby. We want to make sure that it thrives and it remains. There's lots of them. I just hit this button here that might have muted me for a second. But as a small business owner, there's a lot of emotion that goes into being an owner, right? It's our baby. It's our healthy ego tied up in it. It's our identity. We know there's lots of people relying on us, from employees to customers to landlords to vendors to our family. Reputation that's tied up into it. So for you to have a successful business, to be around at 2-year mark, at the 5-year mark, for you to have a successful business and not continually increasing your debt, to have a successful business that the costs that you're incurring, that you're maintaining, are bringing an appropriate amount of value to the business, and more importantly, that you and your business are able to charge what it is that you need to charge, to then net what it is that you need to net, to meet then the definition for you as a successful business. So it's a way to backdoor what do you need to net after taxes. Then you work your way backwards. And then it's continually being honest with yourself that you're accomplishing that. Borrowing money to then have enough money to take home is not being honest with yourself that your business is producing profit. Overpaying an employee that then affects your profitability, that then affects your happiness, if you will, and what you need from your business, is not being honest. Not charging enough to your customer to then pay for these costs, to then net the amount, is not being honest with yourself. So you define the successful business, yes, by the bottom line after taxes. But there has to be other things that go along the way that protect that, that maintain that, so that you're in a position, again, to hit the 2-year, to hit the 5-year. Now, it's not just all downhill from here. If you hit the 5-year, right, there's more maintaining. So the last thing I'll just say is, when you're growing, as in your experience, when you're growing as in the amount of time that you are owning this business, starting and maintaining and etc. Don't then also fool yourself that you have a successful business because you've expanded it and borrowed more money. You have to maintain what is the nucleus of this business, and is that profitable? And as you expand or move to a different location, etc., then is that also profitable? And soon, that 2-year mark. Because a lot of small business owners, they expand, they feel that that shows they're being successful. They borrow money that infuses cash that leads them to think that they're being more successful. And many times that expansion caused them not to face the truth and the reality of what needed to be fixed, adjusted, of the nucleus of the business. And then the whole thing tanks at a further date. So many small businesses, they expand their way out of failure to have an overall failure, meaning, well, this location, it's working, we haven't got it quite profitable. Oh, I should start another location. I can get cash in. That'll help me maintain the first location. Oh, and then I guess I'll get a third location, and that'll have cash flow to help me maintain the other locations, if I'm using examples of locations as it relates to an expansion of a business. When in reality, the first one wasn't working. And they shouldn't have even done the second or the third, because now you have a bigger disaster. It can be the same thing with a new product line or a new service. So it's maintaining profitability from each aspect of your business. All right, hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. Have a great one.